Hi everyone, welcome back to the Procurement and Finance Coffee Break. I'm Richard Beaumont, and today I am going to be asking all the questions to Claire because this is a topic about which I know absolutely zero, but fortunately Claire does. And we're going to be talking about capital market readiness, which Claire assures me is a crucial topic for companies seeking to either go public or seeking investment. So, Claire, I'm going to trust to your excellent knowledge here and hopefully learn something as well. So, let's get going. All right.
Uh,
For my benefit, as much as anybody else's, can you explain what capital market readiness means and why it is important for companies?
yeah, so I'm actually helping a client with this subject at the moment. So capital market readiness is basically about a company's preparation to meet the stringent requirements for either public markets going through an IPO or meeting the requirements of more sophisticated investors. Involves several key areas. So the first one is obviously financial reporting. Financial reporting has to be good. It's got to have not just past audit, but the data and the KPIs need to be there, and it needs to all tie together and be robust. Other things to consider are corporate governance, ESG practices, and legal and tax compliance.
Right.
So being capital market ready can significantly impact a company's valuation. It's not just about, let's say, operational due diligence and how well the company is able to sell its goods or services. It's about the sort of back end of the company, um, how how it's regulated, how it's managed, and how well it is able to report and how quickly. So often what happens is companies will go on they'll go through organic growth, but they'll also go on an M&A trail,
Right.
buying up other companies. From a finance point of view, the problem with that is often they don't integrate those companies quickly. So you end up with, let's say a group of 100 companies with different systems, different data models, um, and that ultimately leads to slow reporting and reporting that isn't on time.
Yeah.
Um, so often it's a gradual process taking maybe 18 months to 2 years to
Right.
professionalize not just the finance function, but as I said, other areas like corporate governance, ESG, legal and tax, having general counsel, having a head of tax at the company. Often
Right.
that's an area that a lot of companies sort of outsource to various accountants rather than having a role internally. So that is what capital market readiness is about.
Right. Okay. So in my layman's terms, we're talking about Richard's startup operating in a random way in my kitchen, turning it into a professional organization with recognizable processes, policies, controls, and all the things that an external assessor or evaluator would look at to say, actually, that's a proper viable operation.
Yeah, I mean, ideally, where you want to get to is have like standard operating procedures as well, because that's another area of risk. If you
Right.
have if you have processes that are not documented and in
Yeah.
people's heads,
Yeah.
obviously there's a high risk that if someone leaves, knowledge walks out of the
Right.
door, it has an impact to the value of the company.
Got it.
So absolutely, but we're generally talking about companies who are, bigger than Richard's startup. Maybe, as I say, got maybe 100 companies in the group or something like that,
Yeah.
uh,
Yeah.
and are, perhaps in operating in more than one country.
Got it. So,
Um,
so I'm hearing the word, in everything you've said, I'm hearing big challenge. So,
yeah.
so, so, if you were going to highlight, I suppose, the really key challenges that companies face when they're trying to prepare for capital market readiness.
Yeah, so I think the first one's financial reporting and IT systems. As I said, these companies that then look to either do an IPO or get investment from one of the big PE houses,
Yeah.
um, often they've been on this acquisition trail, as I say, and they have a plethora of different systems. Perhaps they haven't undergone a rationalisation process of those systems. Perhaps they don't have standard operating procedures or globalisation of their processes. So, and it could, and I think we're going to have a coffee break about this in the future.
Right.
It could be that, for example, it could be that they're reporting under like a local GAAP, like French GAAP or German GAAP, or
Right.
I would say UK GAAP, but UK GAAP isn't too dissimilar from IFRS. But certainly German GAAP, that's quite different from IFRS. And when you're looking to either list or get investment, what you want is ideally to be reporting under IFRS or US GAAP, or
Right.
probably get away with UK GAAP, as I said, because it's not too dissimilar from IFRS. It's looking to make that information available, robust, and easy to understand.
Right.
So certainly German GAAP would be not ideal for a international business to list.
Right. Okay.
So the other points I say is corporate governance as well.
Right.
And in these companies that are kind of fairly not as mature in their processes, there isn't established formal risk management, internal controls. Often they don't have internal audit, or they'll have a limited internal audit capacity.
Yeah.
ESG reporting, again, investors are looking for what their company's ESG plan is.
Right.
Certain investors who are sort of selling them themselves, perhaps their investments as assets as being green, will be looking for companies that have good ESG credentials.
Right.
What else? So legal and tax structures. So again, when these companies have been on the M&A trail, what often they don't do, along with not integrating back office functions as quickly as possible, is they don't do a company rationalisation. So they end up with, as I mentioned, maybe 100 companies instead of 80 companies, and they have so one of the things you can do to just make reporting and management easier is look, we've got multiple companies operating in this country and they've got similar business units, so can we rationalise that and put together a simpler legal entity structure? Talent management is another area. Certainly I've been working with quite a few clients, especially in Europe, who are really struggling for talent right now, and I'm actually seeing them look to other countries at the moment. So, for example, I don't know if you noticed this, but for example, in Germany, it's like a country of engineers, but there isn't so many accountants. Whereas in Britain, we have, I would say, in our companies in Britain, we have a much higher population of accountants, qualified accountants in finance. So this is one of the areas where talent management and thinking about how we're going to support this business and where are we going to get our talent from and which countries are they going to be operating in and what's the service delivery model. That's all something to consider.
Right. Okay. So a big set of hurdles. I guess, that leads to, quite a significant time to prepare. But in the interest of what we can cover in a short coffee break, if we think just about the financial reporting element, I mean, what specific improvements would you say companies typically need to make in order to achieve readiness?
Yeah. So I think for me, the quality and consistency of financial data is key. You mentioned like often they'll have different systems that they won't have rationalised. Those systems will have different data models in them.
Right.
So looking at the data models, trying to rationalise them and trying to ensure that actually the data that you need to capture and report, and of course, in say financial reporting, I'm also considering the disclosure footnote notes that would be under IFRS, for example. is the data models going to capture all that information? Another area is looking at speed of close, and you can look
Right.
at going through like a fast close process, which would be looking at your month-end process, working out
Right.
what can be done sooner. So, for example, if you're making accruals in week 1, can you make them pre-close instead of in week 1? Can you estimate a week's worth of accrual and then true up
Right.
mid-month the following month? You know, again, when I was looking at month end, I would say, you know, how material are certain elements of the balance sheet? If
Yeah.
someone's trying to get something correct to the penny, but actually materially it makes no difference to your view of
No.
performance of that month, then why are you waiting to do that? You know, just make an educated estimate on what the amount is if
Right.
it's material and it's not going to impact your overall view of performance. So
Right.
I think getting information soon, ideally sort of weekday 5, working day 5, rather than 20 days, is important, because by the time you've waited a month for the information, you're probably bored of what happened last month and thinking about next month. So
yeah.
The process of accounting becomes sort of like a you know, I guess almost like a sunk cost, because you're doing it but it's not adding any value.
No. Right.
The other thing I didn't mention is formalising internal control systems over financial reporting.
Right.
So, for example, certainly if he was going for a US listing, you'd need considering SOX controls. You know, Sarbanes-Oxley, you might know that, their SOX controls. Often in these mid-sized companies, they don't have what I would call a control framework in place. So they may have controls or some limited controls, but they'll often be not documented and not actually in a controls framework as well.
Yeah.
So it's things like improving the speed of close, having good quality of data, have good internal controls, and building capacity for potentially quarterly reporting requirements as well. I can see from your face, Richard, that you're absolutely thrilled by the thought of that.
You know how much I love finance, but do you know I have taken one bit of encouragement, which is I've literally written down your comment that it's okay to make an educated. You didn't say guess. You said assessment, estimate.
Yeah.
And I look forward to finance applying that logic to when I come up with an educated assessment of savings. But it's okay. I'll just tuck that away somewhere for the future.
Yeah, I mean, it's within context, right? Because let's say you're just making you're truing up within the next month. You're just perhaps making an assessment of an immaterial amount, which is about a week's worth of accrual. You know, it's not really going to affect EBITDA that much.
No,
it's not going to affect your performance.
And look, it's a sensible approach. I mean, you know, Pareto, I mean, we're not talking 80-20 here.
Yeah.
But actually, as long as the materiality of any kind of reporting is correct, the pence at the bottom, actually, no, it's, you know, that doesn't matter. All right, let's close. And let's, you know, as ever, focus on the practical. You know, if you were a company that was just about to start the journey towards capital market readiness, what, you know, big ticket, what would be their approach?
Yeah, so I think if you're most companies that are kind of not that mature, but were considering an IPO or other route to capital markets, I'd probably engage with some external advisors to do a sort of comprehensive assessment and sort of implementation plan or high level plan. I think what I've noticed is a lot of, I mean, certainly you can have a CFO who's gone through that whole process before, or other C-suite members, and that's helpful.
Right.
But often is useful to have someone provide to you like a checklist of everything you need to consider, and
Right.
whether you have it in place now, or and kind of do a RAG status against it.
Yeah.
So, for example, if you've actually done 0 against corporate governance, or 0 about having a head of tax, or general counsel in the company, then obviously you'd have a RAG status of red, because you've got nothing planned and you haven't thought about it. So I think it's useful to have that sort of traffic light system about all the main areas, and have independent advisor to see where they think the company is, and how much work as well there is to do to get them, so they've got like not just the gaps, but what the milestones are, and they can put together a plan of, okay, now we know this is what we need to do. Who's going to take these actions forward?
Right.
Otherwise, it can be one of those things that kind of go round and round without like a clear roadmap from the outset. I think once you have that roadmap, then implementing a PMO or some kind of project management across the different work streams to push it forward. Because again, otherwise, if you don't have project management, you don't have resources, it's like any kind of project, it'll just go nowhere. I think also taking a phased approach. So, if I would say, in a lot of companies that have been on the acquisition trail and have got integration issues, and that are quite often immature, often they need to take a phased approach, which is like, just let's get the foundations sorted first before we start thinking about IPO. Let's actually report on workday 5 instead of workday 20.
Okay.
So have a phased approach to your roadmap, like get the basics right, then improve maturity, and then look to take the final step towards capital market readiness. Engaging external advisors again in specialised areas like IFRS conversion and ESG reporting. Because often, let's say you're a company reporting under German GAAP, most likely you probably have maybe one person that's ever reported under IFRS in that company. So you probably won't have the skills to be able to do that kind of work, and you'll need help in training the business to be able to report under a different GAAP. I would say also don't underestimate the cultural shift required, because often these companies have bought kind of, I don't know, family-owned businesses maybe, or entrepreneurial businesses. And perhaps they haven't even done things like, routine cash flow forecasting, routine balance sheet recs, and therefore this shift of sort of almost just thinking about operations and top-line sales, and only having sort of a passing thought about financial reporting, back office functions, is often a huge cultural shift for these types of companies, and often requires actually changing the management team. So that's not to say that people are against change, but it often means like professionalizing the management team and just getting more experienced people in. I also regularly reassess progress and adjust the plan as needed, because, as I say, you need that sort of project management at the top, making sure that if you've got a 2-year plan, on a sort of quarterly basis, how on track it is, and what remediate actions need to be taken if it's not on track.
Well, okay, great advice, and clearly a big piece of work. And I guess, as we've always talked about, don't be afraid to reach out and get help, because other people have done this, and if it's a journey that you want to do once and get right, then why not get support from someone who knows what they're doing. So thank you. Now, I've got a horrible feeling that in our next procurement and finance coffee break, you're going to get me to ask you about something which will thrill me even more than capital market readiness.
Yeah, so this is a sub-work stream of capital market readiness, and that's gap conversion. Because I've seen quite a few companies I've worked with in the past 18 months. I was working with one company, not last year, the year before, that was moving from IFRS to US GAAP for specific reasons. And every time you go through a gap conversion, it's always a massive amount of work. So it's something I want to talk about, and what's, as usual, data is the foundation to be able to do it. Well, so I'm sure you'll look even thrilled when you start asking.
Well, I was going to say, don't talk about it anymore, or I shall spoil my excitement for the session.
Okay, right. Thank you, Richard.
Lovely to see you. See you next time. And to everyone, as ever, look, enjoy, comment, follow, and please suggest topics. And if you would like to talk to us on, an episode, we'd love to hear from you. But until next time, bye-bye.
Bye.